Oshibajo flags of solar electricity project for off-grid communities. Nigeria will surpass IMF's growth projection, says BMO. IMF launches climate change indicators dashboard. Financial reforms, we are open to stakeholders with valuable ideas, says AGF. Plus, oil prices drop as coronavirus caseloads rise as the spring meetings end in Washington, D.C. Business Express will be looking at how the outcome of the meetings will be shaping the Nigerian economy. My name is Musa Abubakar, and we are reaching you from the nation's capital, Abuja. Let's begin with IMF. The International Monetary Fund, IMF, has launched a new climate change indicators dashboard. It is an international statistic initiative to address the growing need for data in macroeconomic and financial policy analysis to facilitate climate change mitigation and adaptation. Onenge Fine-Face reports.
The International Monetary Fund Climate Change Dashboard is a single platform that brings together experimental climate change indicators, which allows comparison across countries. The indicators were developed in cooperation with international organizations and agencies, including the World Bank, the United Nations Food and Agriculture Organization, among others. The dashboard covers greenhouse gas emissions from economic activity, trade in environmental goods, green finance, government policies, and physical and transition risks.
This dashboard is an agile statistical response to the growing needs of climate-related data use in policy analysis and surveillance. As you know, climate change is a critical macroeconomic challenge that requires fiscal, financial, and structural policy response.
IMF says to develop the right measures to tackle climate change, governments need robust and comparable data. The new dashboard will therefore help fill data gaps so policymakers can undertake the macroeconomic and financial analysis that underpins effective policies. The indicators are grouped into 4 categories: economic activity and climate, cross-border, financial, physical, and transition risks, and government policy indicators. Onenge Fine-Face, NTA News.
The Director General International Labour Organization, Guy Ryder, in a statement to the World Bank and the International Monetary Fund's spring meeting said economic and social recovery from the pandemic will require policies that promote decent work, address poverty and inequality, and encourage a green recovery. Ryder emphasized that COVID-19 crisis recovery policies must be human-centered and address pre-existing world of work challenges as well as the impact of the pandemic. Citing the sharp increase in poverty and inequality since the pandemic began, he warns that without comprehensive and centered policy efforts, there is a risk that the pandemic will leave a legacy of widening inequality and social injustice. In addition, he said poor and vulnerable people should be supported with better social protection. In remarks to the IMFC, Ryder raised the issue of climate change. While this threatens macroeconomic stability and millions of livelihoods, there is considerable potential to combine the transition to a low-carbon future with creating decent work. The Buhari Media Organization, BMO, has boasted that the Nigeria's economic growth for 2021 will surpass the 2.5% projected by the International Monetary Fund. BMO said in a statement signed by its chairman, Niyi Akinsiju, and Secretary Cassidy Madueke that their confidence is hinged on the manner, the present administration exceeded all expectations with the country's speedy exit from the recession. BMO said the global body did not appear to properly assess the economic policies of the present administration, especially as it had reviewed downwards in January 2021 the country's growth projection before it was caught unawares by reports of the country's economic performance in fourth quarter of 2020 in spite of the global pandemic, and again projecting upwards. The Development Committee of the World Bank and IMF met last week and took a combined look at the global economic situation as well as the recovery path. Business Express today, we shall be looking at how the outcome of their meeting will be shaping the Nigerian economy. And joining me to do so is development economist Professor Kenny Ife. You're welcome to Business Express.
Thank you very much for having me.
Okay, let's begin with the vaccines. The Development Committee say the developing countries need to strengthen their readiness for vaccination campaigns and develop coordinated strategies to reach vulnerable populations. How are we doing in this regard? And ultimately, how will vaccines shape the outlook for the year?
Well, I think Nigeria is doing pretty well. We have received tranches of supplies. Bear in mind that 20% of the population were guaranteed to be delivered. And of course, we will have to look for resources to deliver the remaining 30% if we are going for 50 or 50% if we are going for 70% of the population. But the good news is that we began to receive AstraZeneca. And many centers have sprung up and are delivering. They prioritize elderly people coming down above 60 and then likely to now head down to above 50 and then gradually. And I only heard, I have actually taken one. I went to Federal Medical Center and it was very, very smooth, well organized. I think we also have to deal with the perception of some part of the public against taking vaccination. So that's part of the challenge that we have to face. But in terms of the delivery, the infrastructure for delivery and the administration of the vaccination, I think I'm very happy with what I saw in the field.
Okay, on debt, now let's look at debt. The Development Committee, in line with the G20 decision, lent support for final extension of the debt service suspension initiative by 6 months through end of December 2021, which is also agreed by Paris Club. After December, what next?
I think we have to commend them for agreeing to extend the debt to December this year. Bear in mind that last year they gave 6 months, they extended to December, now to June, and to do that will breathe more life. And especially now that the recovery is on the way, they've already projected 2.5% growth for Nigeria, and we will quickly extend the recession. And much of Africa will be all on growth trajectory. So giving us to December would allow more time for recovery, and then the economy bouncing back, so that they will be in a better position from January to begin to pay the debt. But we'll have to see how that comes up by January. It will be reassessed by January, without a doubt.
Okay, the committee also urged the World Bank and IMF to help countries design and implement policies to address the root causes of excessive and unsustainable debt. How will this strengthen transparency, especially in low and developing countries?
I think it's very important. I quite like the suggestions that came from the Development Committee. They noted the deepening poverty, the widening inequality, and the economic disparity that they feel that needed to be further addressed. They also reckon that decreasing vulnerability to fiscal shock should be our priority right now. And that means beginning to reduce debt, beginning to inculcate all the practices of fiscal transparency, accountability, and fiscal prudence. All of these measures that will fight the challenges we have in fiscal management, and then also reducing the illicit transfers, and then plugging the holes and in public finance system. All of those will reduce our exposure to debt and they increase our debt sustainability. And they've also encouraged them to use more of the instruments, DSSI, they call that, and increase revenue generation. And whilst minimizing all these leakages in the system. So all of those will bring more financial prudence, fiscal prudence, and reduce our exposure to debt and improve debt management and sustainability.
Okay, let's look at food security. A major determinant of the SDG 2 on nutrition has been threatened by the pandemic. The committee called on the World Bank to step up efforts in addressing this concern. Considering our specific scenario, what are the likely steps to achieving food security and meeting nutritional demand?
Well, food security is a big challenge, to be honest. You can't underestimate the size of that challenge. And this is because we are being hit from so many sources. We have conflict, regional conflict, domestic conflicts, and in our own case in Nigeria, we have conflict in all the 6 geopolitical zones. That is reducing the agroecological footprint in the country. And quite apart from that, you also have the flood that has denied. Look at what flood did to onions, and we suddenly had onions increase by 400% in price. So there are so many produce, grains that went under the influence of the flood. But then again, there's always the historic post-harvest losses, which are very huge. 30 to 70% of produce never make it into the food chain, and the other aggravating circumstances. And Nigeria is a big food producer, but we're also exporting a lot of our primary produce. And remember, one of the wisely statistics are not actually telling us exactly what is leaving the country. I remember one of the governors screaming that 50 trailers move food across the border every day to neighboring countries. So that gives you an insight into the size of the challenge. And remember, we're surrounded by Francophone countries and many countries up north. In the Sahel region are even worse hit than ourselves in terms of food scarcity and nutrition. So a lot of those are, but then they are to address this, we need to bring more technology into this, more mechanization, and more land clearing to increase the footprint, and also bring in agri-technology and fin technology, all of them into the equation. And I like what Nigeria is doing, what the NISAL and Central Bank are doing by making sure that there's transformation of the agrarian base by having our subsistence farmers migrate to commercial farmers as responses. And we shifted resources to support growth. So even though inflation is also taking a hit, but you have quantitative response. And so what happened is that more companies are coming out of recession because of the lockdown. More employment is resulting in more farmers accessing credit, and more food is being produced to augment the lack of import in many of the chains. So how do we do more? We will do more by continuing to spread the message, and then also continue to build capacity at the farm level, at the process level, and at the export level. Continue to diversify the economy away from oil. And I thank God that in our last GDP report, oil and gas came to 5.87%. So they are actually no longer, in fact, ICT is 15%. Now, almost 3 times that of oil and gas, and much, much larger than the trade itself. So there are shifts, seismic shift in the structure of our economy. And we have to take advantage of this COVID problem to boost the impact of technology, digital technology, bioeconomy, all of them. We have to boost those. And we've already captured that in our national development plan, the medium-term development plan, making sure that innovation and innovative technology are at the center stage of our development planning process. So I think they're all coming together. It may take a little while, but they're all coming together. The evidence is that we simply jumped out of recession within a quarter. So that is, and that shows that we are going to go much, much further away than 2.5% that was predicted by IMF, growth rate for Nigeria in 2021.
Okay. What sort of private sector viability are we looking at?
So repeat the question again. I didn't hear
What
that.
sort of private sector viability are we looking at?
Well, the private sector, first of all, you know that access to finance is increasing to the base of the pyramid. We haven't had it so good. We will improve. What it means that MSMEs that are contribute over 50% of our GDP and 92% of the workforce and 90% of businesses and about 44 million people. Do you know that Nigeria has half of the MSMEs in Africa? There are 90 million MSMEs in Africa. Nigeria has 44 million of those, half, pointing beyond our weight. And with finance, with access to finance easing out to this sector, then you can see the growth, because they are the ones that are responsible for the growth and in employment. And I can only say, let's just wait and see. But there are good signs in the horizon that things will get better.
Okay, inflation figures will be out tomorrow, and already we are at record highs. How can we leverage on all these baggages through to the fall by the pandemic to create a sustainable and inclusive economy?
Well, the inflation figures have been up before the COVID. They were only exacerbated by the COVID. And I know that the combined action being taken on all aspects, including the implementation of economic sustainability plan, which is 2.3 trillion naira, and then of course CBN already has 3.5 trillion on the table. The combined effect of all of those, plus the continuous fiscal expansion, to ensure that there's no collapse on aggregate demand. That means that the increase in output will be met with the purchasing power. So you have a balanced growth. But if you were doing it one at the extent of it or the other, then you're going to have even more problem. So I think there's a balance of policy and practice. So I think it looks good from my perspective. But again, the inflation figure may still continue to rise for now until because we are the season where we are the planting season, which is possibly the worst time that you can have in inflation. So, but after the planting season and you go into the harvest season, inflation starts to come down. So I don't think it is going to go down. I think it's either that it's steady or still going to have a small rise, as was the case.
Okay. Thank you very much, Professor Ken Ife, development economist. Thanks for your contribution.
Thank you for inviting me. Thank you very much.
Now, moving on, let's take a trip to the commodity market. Now, oil slipped on Monday in tin trading as rising COVID-19 case numbers in some parts of the world kept a lead on prices, even as the Federal Reserve signaled the U.S. economy may soon rebound as vaccinations accelerated. Brent was up 28 cents at $62.67 a barrel, having risen to as high as $63.30 earlier. U.S. crude was down 23 cents to $59.09 a barrel after rising as much as 46 cents earlier. Now, bears regain vigor as analysts see difficult future. Neka Oko has details of the market in the week ended.
Last week was another 4-day trading week as the federal government of Nigeria declared Monday, 5th April 2021 public holiday in commemoration of Easter Monday. A total turnover of 887 million shares worth 9.1 billion naira in 17,837 deals were traded last week by investors on the floor of the exchange. The NSE All Share Index depreciated by 0.13% to close the week at 38,866.39, with market capitalization also dropping to 20.3 trillion naira. All other indices finished lower with the exception of NSE Premium, NSE Mary Growth, NSE Consumer Goods, NSE Lotus 2 and NSE Growth Index, which all appreciated while the NSE SM Index closed flat. The financial services industry led the activity chart with 607.2 million shares valued at 6 billion naira traded in 10,125 deals. The conglomerates industry followed with 102.3 million shares, while the third place was oil and gas industry. Trading in the top three equities were Zenith Bank PLC, Access Bank PLC and Guarantee Trust Bank PLC. They mutually accounted for 259.2 million shares worth 4.8 billion naira in 4,970 deals. A total of 361,254 units of exchange-traded products valued at 1.9 billion naira were traded last week in 29 deals, as well as 44,303 units of federal government bonds valued at 55.3 million naira in 13 deals. 17 equities appreciated in price during the week, 40 equities depreciated in price, while 105 equities remained unchanged. Neka Oko, Business Express.
Now let's join Bosede Abel for Global Market Report.
The third wave of COVID-19 has continued to hit hard on some global economies as European markets retreated slightly on Monday as global stocks continue to search for direction after record highs in several regions last week. European shares received a weak handover from Asia Pacific, where Indian stocks led losses on the back of a surge in COVID-19 cases in the country. Asia Pacific stocks mostly declined on Monday, with shares in India and China seeing sizable losses. The losses came as the COVID-19 situation in the country remains severe, which report that the hardest hit state of Maharashtra is considering lockdown. The Shanghai Composite declined 1.09% to 3,412.95. Hang Seng Index slipped 0.86% as of its final hour of trading, and the Nikkei also fell 0.77% to close at 29,538.73. Futures contracts tied to the major U.S. stock indices ticked lower early Monday, suggesting Wall Street could see muted trading after reaching fresh records last week. Dow futures implied an opening loss of 70 points, while contracts tied to the S&P 500 shed 0.2%, and Nasdaq 100 futures also lost 0.3%. While some African stocks are yet to resume, as at the time of this report, others like South Africa's JSA Africa Top 40, Tunisia's Tudidex, and Namibia's overall index were on the red. Bosede Abel, Business Express.
Let's see how the Naira is faring against other currencies. Now that wraps up this edition of Business Express. Remember to keep in touch with us. Do send in your comments, observations, and suggestions. Also be informed that all previous episodes are available on YouTube on the NTA's channel. You can also communicate with us on Twitter, and the handle is NTA News Now, and the hashtag is BizExp. Business Express returns Tuesday at 9:30 a.m. Be safe out there. I am Musa Abubakar.